$50. So you're no longer risking $50 anymore. Now you covering $25 in profit. So no matter what happened, if the market come back to you and hit you out, you will make $25. Make sense? Yes and no. It's not that you constantly have to move your your stop loss in profit. It's when you're trailing it. So me personally, a lot of time, right? That's just me, okay? Because I grown accustomed to it. That's the hardest part for most traders, right? Making that type of decision. Do I let it go? Do I close now? It's really up to you. It's a personality thing. Once you become accustomed to it, it's like, okay, cool. I'm gonna take my trade, right? I'm gonna take my trade and hold up. I'm gonna take my trade, stop loss at the last low. When market is up this amount, I'm gonna move my stop loss in profit. So SL in profit, right? I'm gonna put just leave it. Yeah, that way at this point you at either break even or you getting a little bit money off the table. A break even will be correct. So remember, you don't lose. You only lose if the market hits your stop loss, right? So if it doesn't hit your stop loss, you don't lose. So if and when the market goes up in profit, it depends by how much. Then you could go ahead, get your stop loss, and place it at break even. So at this point, no matter what happened, you making money. No matter what happened, you making money. You get the gist of that? And then at this point now, you could go ahead and let it ride until it hits your TP. Because sometimes it could come down and then it continue up. Because market doesn't just always shoot up like that. Sometimes it does this. See that? It's just a process. So that's something you have to teach yourself to learn to understand. You're either gonna set it and leave it, or move your stop loss in profit. I always recommend you put your stop loss in profit and then leave it alone. It depends on how much it's up, of course, because there's no reason for you to lose when let's just say you was risking $50 and you up $50. There's no reason for you to lose anymore. Just put the stop loss in profit $10 or $5. At least at this point, no matter what happened, you make $5 or you covering the swap fee, or the commission fee. I'm sorry. Whatever amount you had to pay to take the trade. Let's just say the commission fee was like $5. Put your stop loss in profit at least $5 or $10. So no matter what happened, it evened out. You can even put it $6 where you make $1. Make sense? All right. So that was all rules. I always want to make sure we go over our rules before we do anything. Okay. That's super important because your trading rules or your trading log. Okay. So I know we got a double top, but it's not a double top that we're covering today. We're covering zones. Okay. So what I'm gonna do is I'm gonna take this half right here and I'm gonna move it away. Okay. Take this half like so. We're gonna move it up there. Right. The reason we're moving it up there is because we have to mark a zone. We don't have a zone up there because the market went up. It gave us a 2 bearish candle engulfing, right? And it sold. So it stopped up there and it sold. Because it stopped there, we have to mark that area. Okay. Now, this is how the chart would look like with the candles. Okay. That's how it would look like with the candles. Now, when it looked like that with the candles, when you mark in your zone, you will click on your rectangle property. Remember the little square, the rectangle that you click on? All right. So you want to place your zone from the close point to the wick, right? You want to place it from the close of the last buying candle. So you would do something like this. Okay. You see that? And then I'll match it with the wick, the tail of it, and I'll bring it straight across. You see that? That right there would be my zone. Okay. The purpose of this zone is for when and if the market get back to that zone, okay? When and if market get back to that zone, we'll look for it to give us exactly the same thing like it did last time. You see that? You see now the market went to the zone because remember when market goes to the zone, what do we do? Right? So when market goes down and then it comes back to the same zone, we look to the left, right? So we look to the left to see what the market did last time. And, based on what it did last time, we have an idea of what it might give us. We know last time it gave us a 2-candle bearish engulfing, where it took 2 bearish candles to sell, right? This time around, it did exactly the same thing. It gave us 2 bearish candles to engulf the last bullish candle. So here would be our entry. Okay? Right here. Okay? Because it took 2 of these candles to engulf it. See that? Let me change the color of that. That way it can stand out a bit more. Give it more life. Let's go with blue. Okay? See that? It took 2 selling candles to engulf it, but that's the zone. That's all a zone is. Just like down here, right? The market stops here and it went up. Okay, cool. There's nothing to it. All I got to do is just go ahead and place a zone, right? All right, so I'm going to start from the close of the candle to the wick, and I'm going to run it all the way across. For when and if the market comes to the zone, correct. So when and if it comes to the zone, we'll anticipate for the market to give us a buy-in price action, and once it gives us a buy-in price action, then we'll tick the buy to go up. That's it. Because the zone means nothing without the price action. Simply because it's at the zone, it doesn't mean that it's going to sell, because it can always continue up. See that? It can always just continue up. So that's why you got to wait for the bearish engulfing so you could take the sell. Okay. So for the most part, that's literally all a zone is. Now, what I like to teach you guys when it comes to placing zone, rule number 1 for zone. Okay, always remember that. So I'm going to put this to the side real quick. Okay, perfect. I got the whole thing. All right. When it comes to your zone, when you go to the chart, you always want to use the line chart. Do you remember why we're using the line chart? There you go, because they show you the exact turnaround point, right? So when you use that, you could use a regular horizontal line. It was the same thing that you use for your trend line, identifying the exact turnaround point, right? So you could place your zone. You see that? So that's how it would look like with the line chart. Okay, when you turn the candles on, that's where you will get the wick, and then you will place another one like so, right? That'll be, so all together, right? That'll be one zone. So for when and if the market comes back to your zone, you will look to take the sale. Okay, that right there will be your zones in general. To be more specific, let's just say top zone. Okay, because all the zones are at the very, very top. All right, so let's go ahead and go to bottom zone. So it's gonna be literally the same thing. All right, you see that? So it's literally the same thing we just went over. Okay, I'm yeah, it just flipped the other way, right? And again, it's just zone placement. So again, I'm showing it to you with the candles because that's what we used to. Now, but what I'm gonna do first, like always, I want to remove the first half. Okay, the first half is the fact that market stops here and it went up. Okay, put that away. You see that? So the market went down. It came down, it sold down, and it stops here. That's where it stopped at. So all I'm gonna do is place a zone down here. I'm getting the close of the last selling candle with the wick. See this wick low? I'm gonna match it just like so. Okay. I'm placing. That's it. I'm placing this zone again for when and if. Okay. For when and if the market comes back to this zone, I'll be looking for a PA, to be more specific, a bullish. Okay. There you go. I'm looking for a bullish price action to buy up. Ooh, buy up. All right. A bullish price action to buy up. It's literally, it's the same thing over and over and over and over again. Right. Like, believe it or not, trading is not that hard when it comes to the concept as far as what you're waiting for. And to make your life so much easier, just take 4 hour or the daily. Once you start taking daily price action, oh my God, that's it. Because when the lower your time frame, the more difficult it's going to be, because the more time you have to spend on the chart, and the more chances you have of losing, or is the market tricking you or faking you out. By simply waiting for a daily price action, you know it's at the end of the day I'm clicking buy. At the end of the day I'm clicking sell. That's it. You know, once market reopen, okay, gap close or whatever, boom, stop loss place, I'm done. I'll look at it the next day. And that's literally the gist of it. But there's no need. You can look at it through the day, but you took a daily price action. But just looking at it through the day is not going to change anything. You already took it for what it is. Remember? Okay, so I'm gonna go ahead and remove that, and then we're gonna bring in the candles, right? So we see how it would look like if it come back with the line. That's why I drew that, so because we know what we're waiting for. Come on, get off. All right, we know what we're waiting for. So now I'm gonna grab this, bring it down. Okay. There you go. We got a single candle bearish engulfing, right? Let me make it a bit higher. Give me a sec. There you go. There you go. You got a single candle bearish engulfing, right? Down here. So from the top, now market came into your zone, right? You got a 2 candle bullish engulfing. Right? So you see right here, I put it up there just so you could see it, okay? I was thinking ahead of time. You got a 2 candle bullish engulfing where it took 2 bullish candles to engulf the last selling candle. So let's just draw a line to bring it to life. Right? So that's the last selling candle. And then this is the engulfing point, right? So right here would be your entry. Okay. And your stop loss will be placed at the last low. So this is the low for this one, and this is the last low for this. So your SL will be below the zone. See that? That's literally it. And then you will look, all right, you will look for the market to continue up. Like so. Okay. And then your take profit would be, of course, next structure zone, which will be up here. That will be your TP. See that? That's literally what it is. There's nothing more to it. So again, with the line chart, it will just look like so. You see that? You will just use a line. And then when you put the candles on, and it will give you the second line. And then you will match it accordingly. Does that make sense? Meaning this right here will be your full zone. And literally that's it. Nothing more. Nothing more and nothing less. You still with me? Rico disappeared.